Hello again, traders. Doing Trouble here from Drfx, Swing Trading Mentoring. Going to be taking a look back at some of the trades that were made earlier this week, as well as take a look at some of the movements that have been taking place, which could provide us with trading opportunities in the days ahead. Now, everything is done with the view of accurately forecasting market direction and being able to identify market traps and market opportunities so that we can able to enter the market safely and maximize on your trading gains ahead of market reversals. So these 8 steps are key in order to be able to accurately identify what is taking place on the currency pairs that we're looking at, so that we are able to sidestep many of the market traps that are set for us from time to time and ensure that we're focusing only on the best trading opportunities. Now, taking a look at the pound Aussie dollar, which still could be forming a consolidation set up on its daily chart, which formed the basis of the trade that was made on this pair earlier this week. As you recall, this was a setup on the 4-hour chart to take advantage of this trade, where the exit took place for a trading gain of 33 pips instead of 50 pips, as the market had not yet hit that target by the end of the 24-hour holding period. And of course, this is the overall setup where the market is rallying right now. So as was expected, the market came down to this support point and is now reacting to hitting this major pullback point by this reversal that is now taking place here. So the market has formed this evening star, this is morning star bullish formation, bullish signal, to indicate it is at least responding to this support point and will either rally once more to provide us with another uptrend as part of the formation of this consolidation setup, or we could actually see the market pull back and actually continue this downtrend instead of forming a consolidation. So those are actually the two possibilities for this currency pair. Now, taking a closer look at the 4-hour chart, as part of this rally that has taken place at support, you'll notice that the market would have taken out 2 stop loss areas had traders actually continued to hold their trades short. So if you were not aware of the fact that the market was approaching a major support point, if you're trading only on the smaller time frames, or even if you're on the larger time frames, but you're not able to, you did not take into consideration or did not see that support point, you would have been affected by this pullback that is now taking place at the support point. So a fairly strong and steady reversal that has now taken place. And if you were holding out and expecting this downtrend to continue, and you had entered at any of the areas, any of these 2 areas here, with your stop loss placed at these 2 highs, your trades would have been stopped out. So this is another reason why it's very important to be aware of the major pullback points, especially on the larger time frames, which are the ones that generally control the start or the continuation of trends. So right now, this could be the early stages of the formation of an uptrend to take us back towards this resistance area, where it could then form this second resistance point as part of the formation of this consolidation setup. So it's proving to us, so this reversal that is taking place is showing that our exit target was accurately identified. This was actually the moment when the market actually hit the support point, but this candle here was where we actually exited our trade. So instead of hitting our target, the market took a little while. It started to move sideways, which is something that is very common when the market is approaching these major support and resistance points. There's a tendency for the market to slow down and move sideways, and it may take a longer while beyond the 24-hour holding period to actually hit these targets. But as long as we're still able to capture a fairly strong trading gain, we should be content, especially given the possibility of a reversal that is now taking place. Now moving on to the Swiss franc Japanese yen. which looks to be forming a consolidation setup. It looks to be forming a range consolidation setup, which is where the market forms sideways patterns that allow us to draw horizontal boundaries of resistance and support. Here you can see that the market has actually hit this support point. And so if it's going to be continuing the formation of what appears to be a consolidation, we will expect the market to start a rally and take out this bear candle and provide us with a strong bullish signal, similar to the one that has been formed on the daily chart of the pound Aussie dollar. So as you'd also recall, this was a trade that we made where we entered at the close of this bear candle on the 4-hour chart, and we had targeted a trading gain of 30 pips, but at the end of the 24-hour holding period, the market had not yet hit the trading target and led us to had to close the trade. So again, another example of situations in which the market tends to slow down when it approaches support points on the daily chart. And so this is something where, as I said before, if the 4-hour entry is taking place with a signal that is an ordinary speed signal, then what it means is that it does not have enough momentum to take us all the way down to the support point. So that was an element of risk with that trade, despite the strength of the signal and despite the strength of the setup on the 4-hour chart. So this is something that, so in order to avoid situations like this, what you'll find is that if entry is taking place with setups on a 4-hour chart that lead to fast movement, such as a small consolidation breakout, then we're more likely to see the market break through these areas here and hit our targets closer to the support point without or before the market begins to slow down. But nevertheless, this is the overall scenario of this currency pair, and we could actually look forward to another trading opportunity, especially if we're able to capture this this rally midway. If we were able to get an entry midway the movement back to resistance, then we'll be better assured of being able to maximize our trading gains. Now the Aussie US dollar is shaping up to possibly provide us with a false breakout reversal, which, as defined in my trading manual, basically is a situation in which the market will attempt a breakout at one end of the consolidation, and then it's followed by a reversal that takes us back inside of the consolidation. So for various reasons, any of these 5 reasons, we can see false breakout reversals taking place on any currency pair. And the situation on the Aussie US dollar is that we have a situation in which the market has provided a bearish breakout signal below support, but it's actually too weak to actually start a breakout. And this is one of the 5 reasons that I found that actually leads to false breakout reversals. Here you see the setup on the daily chart of this currency pair, where the market has formed this type of consolidation with an angled resistance boundary and a horizontal support boundary. You'll also notice that the breakout has taken place with this bear candle, but despite the strength of this signal, despite the strength of this candle, not enough of the candle has closed below the support point. So it's considered to be a weak breakout signal because not enough of the candle has broken below the boundary that it is attempting to break out of. So because of that, there's an element of risk in trying to trade this short, and it still keeps the possibility open of a reversal that takes us back inside of the consolidation. Canadian Japanese yen also looking to be forming a consolidation. Based on the patterns that I'm seeing on the daily chart, it looks as if it could be forming this setup, this type of pennant, where we have an angled resistance boundary close to 45 degrees, complemented by a support point, that is a support boundary that is drawn horizontally. Now here you see the setup on the daily chart where these 2 resistance points have been formed, and assuming that the market continues bearish, these 2 resistance points would confirm this as being the resistance boundary. And the assumption is that even though we have only formed 1 support point, the assumption is that the second support point is going to be formed at this area here to allow us to draw a horizontal boundary. Now, why do I assume that? Especially since, as you'd seen in the manual, and as I've said before, since we don't know how far the market is going to be going down towards, and given the possibility that it could actually form a support boundary like this, the reason why I believe that it would have enough momentum to take us all the way down to this area here has to do with the fact that, just get rid of that, has to do with the fact that this signal that is starting the movement is a double top formation. Double top formations are those signals that generally lead to fast and aggressive movements. And so with a setup like this, with a double top formation that is this strong and this large, it increases the possibility that the market will move pretty quickly and pretty aggressively and will have enough momentum to take us towards this area here. If this was an ordinary signal, such as the one that started this uptrend here, you will see here that it would not have had, this did not have enough momentum to take us towards the resistance point. But in this case, because of the fast movement, the fast nature of the market when it's responding to these type of signals, double tops, there's an increased possibility that we would see the market actually come back down to support point. So any trading that is going to be taking place will focus and have this support point as its target instead of an area that is higher up. Now, taking a look at the pound New Zealand dollar and the euro Kiwi dollar, both of which have setups that could provide us with false breakout opportunities in the next couple of days. In the case of the pound New Zealand dollar, this has formed a range, or rather a pennant consolidation setup on its daily chart, and has recently rallied at its support boundary and created a new support point. Now, the false breakout reversal setup that is in play for this currency pair is actually on the 4-hour chart, whereas, well, both the daily and the 4-hour chart, whereas you can see here the market formed this small consolidation setup in the form of a range and broke out initially bearish, but was then followed by this sharp reversal that took us back inside of the range and is indicating that we're going to be heading aggressively back towards this resistance boundary. So what happened here is that instead of continuing the breakout, the market used this false breakout reversal as an opportunity to create another support point. So this line was actually a little lower down. The support boundary was actually a little lower down, but I adjusted it a little higher to take into consideration the fact that these types of reversals generally lead to the formation of another support point, and so it should be accounted for when drawing the support boundary once again. So this is a new support point within the larger consolidation setup, and this is telling us the market is likely to move aggressively and take us towards the resistance points once again. Euro Kiwi dollar has a setup where the market has formed this range consolidation on the daily chart, and recently aggressively broke out of this small pennant that was formed just above the resistance boundary. But what I'm seeing is the possibility of a reversal because of how large this candle was, this breakout candle, bullish candle was, and the sharp nature of the bearish candle that has taken place the very next day. So I'm looking at this as a possibility in terms of the market struggling to continue to break up bullish and heading back inside of the consolidation and back towards the support boundary. So in summary, accurate entry and good exit strategies will have help us to avoid reversals such as the one taking place on the pound Aussie dollar. The market tends to slow down at major support and resistance areas, and so what I think is best to do is to exit our trades at an area just ahead of the boundary, at 8 to 10 pips ahead of the boundary, especially when we're talking about these major support and resistance points on the larger time frames. So we want to be able to exit these areas comfortably and be able to, which will allow us to maximize on our trading gains and not have to decide whether or not to exit or close, keep the trade open or exit the trade after the 24-hour period has ended. So especially when the market has a tendency to slow down at these areas, you want to ensure that you're able to exit the market quickly and move on until the next trading opportunity arises, as a way of not staying in the market too long, especially given the possibility of sharp reversals at these areas. So identifying overall market direction and setups and pullback points on larger time frames, very important to being able to identify profitable trading setups. So again, as long as we use the principles of the larger time frames and the Japanese candlestick signals and follow the 8-step process in identifying market opportunities and market direction, then we'll be in a much better position to be able to identify profitable setups. So in the weeks ahead, in the days ahead, the focus is going to be on the 50 to 70 pip trading strategy. But of course, we're going to be also including a lot of the trading opportunities that provide between 30 and 50 pips as the market moves within consolidation setups. There are a lot of these, and a lot of these are just as profitable and just as stable as the ones that provide 50 to 70 pips. But because the 50 to 70 pips are not as frequent, then they have to be complemented by the shorter moves, which are just as profitable and also have a high probability of success. So once I'm able to identify these setups and accurately identify where to exit a trade so that we can maximize on our trading gains, we should be able to identify and capture more frequent trading opportunities that will allow for faster turnover in a very short period of time. So of course you can just hit the reply button and let me know in terms of what has been discussed in this slide, in this presentation. And of course, we're going to be looking forward to trading opportunities to maximize on these opportunities in the days ahead.